interest income other than interest from members, other than interest from members, other than interest from members, 50% of gross interest income, other than interest from members, other than interest from members. Number two, you are talking of 100% of rental income, 100% of rental income, 100% of rental income, less expenses incurred, 100% of rental income, less expenses incurred to earn the rental income. You are saying 100% of rental income, less expenses incurred to earn the rental income. Less expenses incurred to earn the rental income. Less expenses incurred to earn the rental income. Then number three, we can also talk of any other taxable investment income. 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 Then an NB on that you can mention and say, an NB on that you can mention and say, NB on that you can mention and say, SACCOs are allowed to distribute. SACCOs are allowed to distribute. SACCOs are allowed to distribute 80% of their income. SACCOs are allowed to distribute 80% of their income as bonuses and dividends to their members. SACCOs are allowed to distribute 100%, not 100, but 80% of their income as bonuses and dividends to their members. 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 So, in this case, we are saying that at any given point, whenever I'll be talking of SACCOs, they are allowed to distribute up to 80% of their income. Of course, to their members as dividends and bonuses. Compared to Apex. Apex, they are allowed to distribute what percentage? 100%, right? Whereas for SACCO, ideally, they're allowed to distribute only up to 80%. Only up to 80%. So, and also another thing that you're going to learn, you'll find that at any given point, whenever I'll be looking at SACCOs, it's not like I'm not going to work out the taxable income just like any other income. Of course, for those registered under the Cooperative Society Act, in this case, we normally tend to prepare a schedule. It is this schedule that we're going to use to determine the taxable income. And it's not like the other form of businesses whereby you are considering some of probably allowable expenses and such. In this case, it will be purely form of a schedule. It is from that schedule that you're going to use to come up with the taxable income. If we had distributed dividends, we will compare if it is more or less than 80%, then you deduct it. Again, you'll find that it is very simple because we'll be having an issue to do with the aspect of maybe talk of the aspect of allowable expenses and such. And for us to understand this concept, I want us to try an illustration question. First of all, let me check it out. That was a which year? That was a which year? You'll find that again, SACCOs pia ni simple kabisa whenever we are talking of taxable income of determination of taxable income of SACCOs. Pia hiyo haina ugumu wowote na pia nyinyi mtaona na pia nyinyi mtaiona. So I'm looking at a question for SACCOs. Sacco. Ili swali limepotea wapi? Yeah? Doreen wasemaje? November 2016? November 16, question number. You said question number? November 16, question number 3A. Yeah, very good, very good. Let's check out that question. November 16, question number 3, part A. November 16, question number 3, part A. November 16, question number 3, part A. Believing that all of us have a question, still I can share it here. November 16, question 3. So, this is a question. Question number 3. This is what we are told that question number 3, Jamboree Sacco Society Limited reported the following income and expenditure for the year ended at 1st December 13. Income, I'm given gross rental income, interest on savings account, interest on members loan, interest on fixed deposit account, interest on treasury bills, 435. Less expenses, repainting of rented property, interest on loans for money invested in treasury bills, administration expenses, legal expenses relating to rented property. Additional information, we are told that the SACCO declared dividends and bonuses of 980,000. Note 2, corporation tax is at the rate of 30%. Total taxable profit for the SACCO for the year ended at 1st December 15. Tax payable by the SACCO for the year ended at 1st December 15. So, given such a case, at any given point, whenever I'll be talking of SACCOs, you'll find that, as I had mentioned earlier on, we will not do it like the way we normally do, like on the other form of businesses. But instead, you normally find that we normally tend to use a schedule. In working it out. So, on that case, I want us first of all to have this schedule in mind. so that it should be very easy for us at any given point whenever I'll be considering any question for SACCOs. So we are saying that before we look at that question, we say that SACCO, I'm not going to work it out like any other normal business, but instead we normally tend to use a certain schedule to assist us in determining the taxable income of a SACCO. So in that case, allow us to talk of a schedule, assuming that maybe I'm determining, say like I want to determine taxable income, say like for Muhasibu. Talk of Muhasibu SACCO. Muhasibu SACCO. Assuming you are talking of 2020 computation of taxable income. Muhasibu SACCO, say 2020 computation of taxable income, computation of taxable income. So I want us to use this schedule, and at any given point, whenever you're dealing with SACCOs, we'll always tend to use the schedule that allows us to look at right now. So in this case, we normally talk of a nature of the income, nature of income, talk of an amount here, taxable percentage, taxable percentage, taxable percentage, and you can also talk of the taxable amount, taxable amount. So anytime you are looking at SACCOs, let this schedule always click at the back of our mind. Anytime I'm handling SACCOs, let this schedule always click at the back of our mind. Let this schedule always click at the back of our mind. So nature of the income here, maybe you're talking of, say, like interest on fixed deposit account. I'm having an amount there. Interest on fixed deposit account. This is a third-party interest, non-members' interest. And according to what we've mentioned, what have we said in regard to third-party interest? What percentage am I going to take it as a taxable income? 50%. So I'm going to have 50% of that, having it there. Maybe I'm also talking of, say, like income on short-term notes. Income on short-term notes. Also, this is an interest from third party. Talk of 50%. Because remember, amongst our taxable income, we said I'll be talking of 50% of interest generated other than from interest on members. So that's why you're taking off 50%. Then also maybe you can talk of I want us to look at it in a wider perspective. Maybe talk of what? Dividends, say, from companies. Hapa nataka tuone watu watafikiriaje. Dividends from companies. Dividends from companies. What percentage are you going to take it here? Dividends from companies. Qualifying and qualifying, I'm exempt. Qualifying, right? And if it is qualifying, it meant that withholding tax was a final tax, right? So hapo sitachukua chochote. Hapo sitachukua chochote. Hapo sitachukua chochote. Talk about maybe talk about interest on members. Interest on loans to members. Interest on loans to members. What percentage tutachukua hapo? Nancy. What percentage tutaweka hapa? Lagato unasemaje? Non-taxable, correct. Hiyo sita tax. Hiyo sita tax. Interest from government securities. Interest from government securities. Interest from government securities, assuming I'm having a figure there. That is qualifying, non-qualifying, ama exempt. Qualifying, non-qualifying, ama exempt. Interest from government securities, qualifying, non-qualifying, ama exempt. Hey. Huyu Nancy anasema ni exempt. Eh? Ninio? Nancy, wewe ulikuwa class kwanza. Yeah? Uh-huh. Na hii kitu tukasema jana pia. Na tukasema jana pia, Aki. We're doing that recap right now. Talk of investment income. Ideally, we normally talk of two main. That is interest income. That is interest income and dividends income. We start with dividends income. We start with the dividends income. We start with dividends income. Dividends income, we normally talk of three main. That should be exempt. This is non-taxable. We normally talk of qualifying. And we normally talk of non-qualifying. So, starting with exempt. Dividends income. These are, as we've said, non-taxable. Examples of such dividends. Number one, dividends received. This is a foreign dividends. Dividends received from foreign investment. This is a foreign dividends. Dividends received from foreign investment. Number two, dividends received. Dividends are received. Of course, I talk of our dividends. Yeah? Dividends received from a subsidiary company. Dividends received from a subsidiary company. Dividends received from a subsidiary company. i.e., we are talking of controlling interest of more than controlling interest. In this case, for tax, we normally talk of more than 12.5%. More than 12.5%. Number three, we normally talk of dividends received from life assurance. Dividends received from life assurance fund. Dividends received from life assurance fund. So, at any given point, whenever I've seen such dividends, what should click at the back of our mind is non-taxable. Dividends that are not going to be subjected for any form of tax. That is exempt dividends. What about qualifying dividends? What about qualifying dividends? What about qualifying dividends? At any given point, whenever we're talking of qualifying dividends, we know very well that, first of all, withholding tax is at the rate of 5%. And at this point, withholding tax is a final tax. Withholding tax is final. I.e., this income is not going to be subjected for any form of tax. Withholding tax is final, i.e., this dividends is not subjected for further taxation. It's not subjected for further taxation. It's not subjected for further taxation. That is withholding tax. Withholding tax is at the rate of 5%. And in this case, we are saying withholding tax is a final tax. And that is not going to be subjected for further taxation. Examples of such dividends. Dividends received from public limited company, private limited company, and SACCOs. That is qualifying dividends. We are saying withholding tax is at the rate of 5%, and this is a final tax. That is, that dividends is not subjected for further taxation. Examples of such: dividends received from public limited company, dividends received from private limited company, dividends received from SACCOs. That is qualifying dividends. What about non-qualifying? Non-qualifying dividends. Withholding tax is at the rate of 15%. Withholding tax is at the rate of 15%. Withholding tax is not a final tax. Withholding tax is not a final tax, i.e., this income is subjected for further taxation. This income is subjected for further taxation. But you know very well we are going to deduct that withholding tax relief. Examples: dividends received from cooperative societies. Dividends received from cooperative societies, other cooperative societies, but not SACCOs. Dividends received from cooperative societies. Dividends received from cooperative societies. This is non-qualifying dividends. We've said we'll be talking of two: dividends and interest. Now, let us talk of interest. Talking of interest, ideally, we'll be talking of three. That is exempt interest, qualifying interest, non-qualifying interest. three main. We start with the first one. You said we'll be talking of three. That is exempt, qualifying, and non-qualifying interest. So we start with the first one, exempt interest. Exempt interest, known as non-taxable. Exempt interest or non-taxable. Number one, ideally, we're saying that these interests are going to be subjected for any form of tax. The interests are not going to be subjected for any form of tax. These interests are not going to be subjected for any form of tax. Examples. Number one, interest from foreign investment. Foreign interest. That is interest from foreign investment. Interest from foreign investment. Interest from foreign investment. Number two, interest from post office savings bank. 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 Interest from housing development bonds. Interest from housing development bonds, subject to a maximum of 150,000. 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 You can also talk of interest from home ownership savings plan. Interest from HOSP, subject to a maximum of 96,000 shillings. 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 That is exempt interest. Take us to number two, qualifying interest. Qualifying interest. Qualifying interest. Withholding tax is 15%. Withholding tax is 15%. Withholding tax is 15%. And a final tax. Withholding tax is 15% and a final tax, i.e., not subjected for further taxation. 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 Yeah? Yeah? So in this case, maybe you can relate it. Okay, this is a previous. Current do 300,000. Current is 300,000. Of course, our current is from 2020. 300,000. That is current. Just add that one. Sorry for that. 150, that was a previous. Current is 300,000. Current is 300,000. So we are talking of qualifying interest. Withholding tax is 15% and the final tax, i.e. not subjected for further taxation. So in this case, and mark this well, received by individuals. Received by individuals. Received by individuals. Received by individuals, received by individuals from financial institutions, from financial institutions, received by individuals. Hapa nime-underline sana. Received by individuals from financial institutions, e.g., the categories under financial institutions, we are talking of banks, treasury, bills and bonds, pia insurance companies ziweka hapa, insurance companies, etc. So we are talking of received by individuals from financial institutions, keyword, received by individuals from financial institutions. Examples: bank, treasury, bills and bonds. And in this case, we are talking of these are now the government securities and all that, insurance companies, etc. That is qualifying interest. Withholding tax is 15% and it's a final tax. That is not going to be subjected for further taxation. Talk of non-qualifying interest. Non-qualifying interest. Non-qualifying interest. Non-qualifying interest. Non-qualifying interest. Non-qualifying interest. Withholding tax is 15%. Withholding tax is not a final tax. It's not a final tax, i.e., subjected for further taxation. i.e., subjected for further taxation. i.e., subjected for further taxation. Subjected for further taxation. Withholding tax is 15%. Withholding tax is not a final tax. That is, it's going to be subject to further taxation. Examples: interest received by market all other persons. 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 Other than individuals. Other than individuals. Other than individuals. Other than individuals. And we mentioned in law, we normally have two types of persons, ideally natural and legal person. So legal persons, ideally, we are looking at talk of limited companies, talk of just so long as it's not an individual. So long as it's not an individual in this case. So we're talking of interest received by all other persons other than individuals. Then we have interest from housing development bonds. Interest from housing development bonds in excess of 150,000 in the previous and current 300,000. Current is from 2020. Current is from 2020. Interest from housing development bonds in excess of 150,000. This is previous and current 300,000. And current 300,000. Then also can talk of interest received by individuals, but not from financial institutions. Interest received by individuals. Interest received by individuals. Interest received by individuals, but not from financial institutions. 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 Na Asad told you earlier on, hii hatutawahi epuka. Hii concept hatutawahi epuka. Hakuna siku tutawahi epuka hii concept. Always utaiona ikitestiwa. Always. Hakuna siku tutawahi epuka that concept. Hakuna siku tutawahi epuka that concept. Hakuna siku tutawahi epuka hii concept. So we've done a recap of that. So kindly go through that till uelewe each and every concept, because tumesema hakuna siku tutawahi epuka hii concept. Hakuna siku tutawahi epuka this concept. Collins, uko sawa? So tumesema hakuna siku tutawahi epuka hiyo concept. Hakuna siku tutawahi epuka hiyo concept. Nancy, uko sawa sasa? So come back to our format. Come back to our format. Come back to our format here. Come back to our format. 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 Of course, we are talking of interest from government securities. And in this case, we know very well that this is non-qualifying dividends. So, and it is from third parties. So I'll be taking 50%. So I'll be taking 50%. Then the other case talk of interest from fixed, maybe interest from circles. We normally talk of front office. So interest, that is from interest from front office savings account, FOSA. Interest from front office savings account, 50%. We have it there. Then talk of rental income, for example, here. Rental income. We've said that at any given point, I'll be considering this. I'll be taking our rental income. We deduct the expenses incurred to generate that income. We'll be talking of our rental income. We deduct expenses incurred to generate that income. We deduct expenses incurred to generate that income. So ideally, rental income, that is a gross minus expenses. Gross minus expenses. Gross minus expenses. And what have we said on rental income? What percentage are you going to take? Tulisema tutachukua what percentage? 100%. 100%, 100%, 100%. So that is what we'll be having, 100%, 100%, 100%, 100%. So you'll find that and any other interest that we'll be having, or any other investment that we'll be having. So after having this, I'll be talking of our income there. I'll be talking of our income there. I'll be talking of our income there. So this is the taxable income that you're going to consider, the taxable amount. But from that, what you're going to do, we less 80% of the taxable income. We compare with actual dividends and bonuses paid. Actual dividends and bonuses paid. Whichever is lower is the one that you are going to take here. Whichever is lower is the one that you are going to take it here. Whichever is lower is the one that you are going to take it here. Whichever is lower is the one that you are going to take it there. And at this point, you've said, I'm not going to consider ile concept ati kuangalia allowable expenses and unallowable expenses in this case. At any given point, you are talking of circles. At any given point, you are talking of circles. We'll be having this format always. So we are saying that we'll not be considering the aspect of us having allowable expenses and non-allowable expenses. Ideally, this is what we'll always be considering. At any given point, I'm talking of taxation of circles. So that as at the end of the day, our taxable income, as at the end of the day, our taxable income, we should be having it as that. We should be having it as that. We should be having it as that. So this is a format that we should always consider. At any given point, we are dealing with, at any given point, you're dealing with circles. At any given point, we are dealing with circles. So you must always consider this. You must always consider this. Now, come back to our question. 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 Come back to our question here. Come back to our question. We need to work it out. You need to work out that circle. You need to work out. We need to compute that. You need to compute that. You need to compute that. So just a moment. So we need to compute that. We're just going to use the same format. We're just going to use the same format. So Jamboree. Let us work it out quickly. Let us work it out quickly. Believing that all of us have that in me. Collins, that question is November 16. November 16, question number 3. November 16, question number 3. Collins, that question is that. So, November 16, question number 3. So, considering that question, this question of ours, let us work it out. 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 So I'm having the name of the circle, Jamboree circle. So I'm having Jamboree circle. Jamboree circle. So we start with the income that I was given here. So I'm having, the first case, I'm having gross rental income. So we have rental income. Rental income. But what were we told in relation to rental income? Did you have any expenses relating to rental income? Did you have any expenses relating to that income? We had. Sindio. So gross, I'm given 840. Less expenses, repainting of rented property, 156. Legal expenses relating to rented property, 72. So we should be talking of 840 minus 156 minus 72 to give us 612,000, right? Taxable percentage, 100%, 612,000. Interest on savings account. Interest on savings account. Interest on savings account was given how much? 160. Taxable percentage. Taxable percentage, 50%. Because it's an interest from third parties. So that should give us ngapi? 80. Interest from members' loan. Amount 1840. Taxable percentage because you mentioned that one is not going to be taxed. The next one, interest on fixed deposits account. Interest on fixed deposit account. Interest on fixed deposit account. How much are we given? 560. Taxable percentage. Yeah, taxable percentage. %50. That should give us 280. Interest on TB. Interest on TB, treasury bills. I was given 435. But on that, look at the expenses that we incurred. Interest on loans for money invested in TB, I was given 114. So for me to earn that income, those are the expenses that we incurred, 114. So therefore, we should be talking of how much? 435 minus 114 to give us 321. And you know very well, that case, I should subject it to 50%. To give us how much? 160,500. To give us 160,500. To give us 160,500. To give us 160,500. I don't have any other income. Administrative expenses, in that case, you aren't told if it was incurred in either of the income. So therefore, and as I mentioned earlier on, at this point, whenever I'm talking of circles, we'll not be talking of allowable expenses and such. That's why we are leaving administrative expenses, because we aren't told it affected which form of income here. So that's why we are leaving it. Now, in this case, that should give us how much, Jameni? 612 plus 80 plus 280 plus 160.5. Our income. Did you have any dividends that we paid? Dividends and bonus, kuna yenye tulipa? Tulipa ngapi? So actual dividends paid is 980,000. And you said you're going to compare with what? We are going to compare with what? 80% of our income, 1132,500. So that should give us how much? Whichever is lower. In our case, the lower is the 80%, 906,000. So therefore, what should we be having as our taxable income? Total taxable income. We should be talking of 226,500, 226,500, 226,500, 226,500. As simple as that. In this case, you are also asked to determine tax payable. We also ask to determine our tax payable. We also ask to determine our tax payable. So talk of our tax payable. Talk of our tax payable. So if we are to use our current rate, so here we are told that corporation tax is at the rate of 30%, and that's the beauty part with the examiner. He'll always give you a percentage to use. But in our case, let us take our current rate, the 25%. So gross tax liability, gross tax liability, 226,500 by 25%. Then we less WHT relief. We less withholding tax reliefs. We less withholding tax reliefs. We less withholding tax reliefs. Deducting our withholding tax reliefs, hapa naona kuna interest on treasury bills, kuna interest from fixed deposit account, kuna interest from savings account. All these are non-qualifying interest. And we mentioned that withholding tax is not a final tax. And that's why we have subjected them for further taxation. And for that reason, for us to be fair, we need to deduct the tax that was already subjected, or rather the tax that was already submitted earlier on. So withholding tax reliefs, I'm having interest on savings account, interest on savings account. Amount subjected to tax was 80,000 by 15%. Interest on fixed deposit account. Interest on fixed deposit account. Amount that was subjected to tax was 280,000 by 15%. Interest on treasury bills. Interest on treasury bills. Amount subjected to tax was 160,500 by 15%. And remember, these are deductions. These are credits. The reason why we are deducting them is this. The reason why we are deducting the withholding tax relief is because before I receive this amount, before I received, say, like interest on fixed deposit account, I'm going to receive that amount net of withholding tax. Reason being, at this point, the withholder probably, at this point, he has already submitted this tax on my behalf to Kenya Revenue Authority. He has already submitted this tax on my behalf to Kenya Revenue Authority. And as such, you'll find that as I'm subjecting this income for further taxation, there's an amount that was already submitted in advance. So the amount that was submitted in advance are the one that you are removing, are the one that you are deducting as reliefs, because they are already submitted in advance. They're already submitted in advance. These are the amount that we are deducting. Those are the amounts that you are deducting. So that as at the end of the day, that should give us our tax payable. 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 Unless kuna mtu atasema